Welcome to the Rogue Trading Communities video, and this video is about multiple time frame analysis part 2, and this is for the people who have completed part 1 of this series. If you haven't completed, then link will be in the description. Please click on the link, go to the part 1 and complete it, and then you can start with the part 2. If you ask me why, because part 1 covers the basics of market structure. Okay, you have to complete part 1, then you can start with part 2. Okay, let's get started with this video. Now, in this concept, I'm gonna include the process of trading. So what do I mean by process of trading? Well, we're gonna understand how to use multiple time frame analysis to determine type of trade we want to take, right? So this is something that every single trader out there needs it, right? Because let's say I can teach you about all the concepts of VSA such as buying climax, selling climax, or Wyckoff schematics. I can teach you n number of concepts out there. But at the end of the day, how do you even apply that, right? That is something that we're going to look into in this particular video. Okay. Now, the checkpoints for the RTC trading methods. What are the checkpoints? Well, the checkpoints are something that, let's say I have a total of 6 pointers that I have created right here, so that you can follow this and you can actually make a trading plan according to it. Okay, so these are the 6 checkpoints, or these are the 6 steps that I follow when I'm analyzing a stock. Okay, so what are the first thing? To choose the type of trade you want to take. Whether you want to take an intraday trading, whether you want to go for positional or swing trading, you have to choose the type you want to take based on your lifestyle. So let's say I'm a full-time trader. I have enough time to spend in the markets from 9 to 3. I can choose intraday trading. If you have a 9 to 5 job, or if you're a business owner or a housewife, doesn't matter who you are, if you don't have enough time to spend in the markets, but still you want to trade, then I would request you to choose positional and swing trading, even if you can spend 60 minutes a day. That's it. Okay, all you need is 60 minutes a day. You can complete your 9 to 5 job. You can come back home. You can at least spend from 7 to 8 o'clock. Just open your trading view charts and you can analyze it, and based on it, you can place your orders and you can do positional and swing trading. So that's what it is. Choose the type of trade you want to take first based on your lifestyle. Okay. The second thing, to determine the overall trend of the market from higher time frame to lower time frame. The third one, to identify the phases of the markets in different time frames. And fourth one, to look for entries based on the market scenario. And fifth one, to understand the probability of your trades based on the opportunity. And sixth one, to determine your entire trading plan and risk management. So these are the 6 checkpoints that I usually follow, and let me show you this in the trading view terminal with a proper practical example. Okay, let's get started. So now we are in the trading view terminal, and this is Godrej Consumer Products stock of the National Stock Exchange, India. Okay, so now I'm in this monthly time frame right now. Why am I in monthly time frame? Because I'm going to show you the example for positional and swing traders in this concept. Okay, but if you want to get into the intraday concept, then you can just lower your time frames. In simple, all you have to understand that if you want to get into positional and swing trading approach, then you have to analyze the overall trend of the market from monthly, weekly, daily time frames. Okay, and your entry time frames will be the hourly time frames actually. But if you want to go for intraday approach, if you want to find setups in terms of intraday, then you can go for daily, hourly, 15 minutes in terms of trend identification, and you can use 5 minutes and 10 minutes, also even 15 minutes to take an entries out there. Okay, Rogue Trading community members, especially the private channel members out there, you guys know how you can take an entry using demand and supply divergence or Wyckoff schematics, but still you get the idea right now. Okay, now let's get started. Before getting into the analysis, you have to understand that previously in the part 1, I have given you a hint in terms of entries actually. Okay, so what did I say in part 1 is when you want to take an entry, what is the thumb rule for entries actually? The thumb rule for entry is very simple. You have to always look for opportunities either at the end of a corrective and a beginning of an impulse actually. So in this particular case, in this monthly time frame, how many impulse and correctives are there? Let's identify that first, right? So in this particular case, you have a higher high momentum, then a higher low, and then you have a higher high, higher low, and higher high. And obviously market is still creating impulse, corrective impulse, then this particular stock has a potential to create a up move right here. Now forget about that. Now if you see how many higher highs and higher lows do you observe right here? Well, if you ask me, you have one higher high right here, you have one higher low, you have second higher high right here, you have a second higher low. So you have impulse, corrective, and obviously this is an impulse phase right now. Okay, impulse phase right now. Perfect. Now, if you can identify this simple basic structure, now you also understand where you have to look for opportunities. Well, understand, always look for opportunities at the end of a corrective and beginning of an impulse, because this is where you're actually getting a reversal, right, on a higher time frame. So you have to look for opportunities at this particular point. And what is the second opportunities that you can look at? You can actually look the entries within this impulse, within the running impulse also actually. Okay, you might get multiple impulses and correctives on a lower time frame, and based on that also you can take a trade. But the thumb rule is very simple. You have to look for opportunities at the end of the corrective, because that is where the trend will start. So hence you have to look for opportunities at the end of a corrective. Okay, so now let's start with it. So in this particular case, I'm going to take an example at the end of a corrective, and I'm going to see how many opportunities. You can take this one or this one, anything. I'm randomly taking the opportunity right here. Okay, so I'm going to choose this section right here. Okay, so I'm going to choose this section right here. Okay, let's get started. Now let's go ahead and let's see analysis. Let's do the analysis right now. So as you can see, let's start with monthly. Higher high, higher low, higher high, higher low, right? Up move, clear up move. Now let's go for weekly. Clearly a clear uptrend, right? Even if you talk about, there are within the impulse and correctives you have multiple swings actually, but the overall trend is an up move. Even in this particular case, you have a higher high, you have a horizontal corrective right here, and then market went up again. You are having a higher low momentum right here. Now most importantly, let's go to daily and let's see what are the opportunities right here. Even the daily overall time frame could be an uptrend, but if you ask me, the dailies you have, like let's say in this particular case, you have a high, impulse, corrective, impulse, corrective, impulse, corrective, impulse, corrective, impulse. Now most importantly, this is your previous higher low, and market is actually gave us a sign of reversal in terms of market structure right here. So if you know the concept of semi reversal and a complete reversal, especially members know about it, right? Members, if you can look into it, this particular scale is already confirmed that in a daily time frame at this particular point, it has confirmed that it's a reversal right here. Okay, but doesn't mean that the overall trend has changed right here. Okay, so simple. So in a downtrend, and if you observe carefully here, we already have a confirmation for a reversal again, right? So this was not able to break the previous lower low, and this is your lower high, right? And finally it is just breaking the previous lower high right here. So that is the reason, if you know the concept of semi reversal and complete reversal. Okay, now we have some sort of a reversal sign on a daily time frame. So what was it? We have determined the overall trend of the market. So monthly is an uptrend, weekly is an uptrend, and daily is also in a form of the entire time frame is an uptrend, but it is just in a corrective phase of monthly. That's it. Okay, hope you understood it. Now most importantly, you might be asking, okay, I do understand right here, but how do you determine that this is the end of a corrective, right? How do you determine based on market structure that this is the end of a corrective? Well, I usually use the Fibonacci tool to determine the reactions of the golden ratio levels. So when I draw the Fibonacci tool from the previous higher low to the new higher high, you can see right here, market is actually reacting to the 61.8%, 50% and 38.2%. Well, this area is actually the strongest area when it comes to impulse and correctives. Okay, so obviously after an impulse you should get a corrective, after a corrective you should get an impulse. That is what market structure is all about. Okay, and please understand, I'm not using the Fibonacci levels right here to determine an entry in the market. I'm using the Fibonacci levels to measure a corrective. How far this corrective can go, whether the corrective can go only up to 38.2 and then could reverse, or the corrective could go up to 50% and it could reverse, or the corrective could go up to 61.8 or reverse, or the corrective could go below 61.8 and it could reverse. But in this particular case, if you observe carefully, if this breaks the entire 100% levels, then it means that it's a complete reversal. Right? If you know about it, if it is breaking the previous higher low, it's a complete reversal sign right here. Hope you understand this market structure concept right here. Okay. So this is how we determine it. So one, I have a confirmation that this is the end of a corrective. Now let's go to the smaller time frames right now in terms of weekly and even in terms of daily, right? If you observe carefully, even in a daily, it is already taking a kind of some sort of a reaction from the 61.8 and it's holding at the 50% levels right now. Perfect. Now, most importantly, we know if this is the end of a corrective, definitely we should get an impulse from this point, right? We don't know how long that market will go, but we have to look for opportunities right now in this particular case. Now, when we talk about entries in terms of positional, we usually go for the 1 hour time frame. Now let's switch to the 1 hour time frame right now. Okay. Now 1 hour time frame, if you observe carefully, one thing, we already have a semi reversal right here, and second thing, market is actually creating a sideways momentum right here, right? If market is creating a sideways momentum, what does it mean? Now you have to understand the second part of the checkpoints which I have mentioned in the earlier to identify the phases of the market. Well, when it comes to identifying the phases of the market, I mean, these are the phases. Well, every single stock out there, every single financial instrument or every single chart out there will follow these phases. And if you understand these phases with volume spread analysis, you can also trade these phases. Okay. So we have accumulation, reaccumulation, distribution, redistribution zones, and even impulse and correctives. Even those can be considered as a phase. So you have to recognize what kind of phase you are in, and based on that, you have to look for an opportunity. So in this particular case, let's assume that here market is creating a sideways market. Now, as per the daily time frame, you can see that market is already in a downtrend, and now market is in a form of a corrective. Let's assume this is in a form of a corrective, and it's creating some sort of a sideways market right here. So if this is a sideways market, what does it mean? Either this can be a kind of like an accumulation zone, or this can be a redistribution zone, right? Because market is already in a downtrend, right? Market is already in a downtrend, and in this particular case, if market is creating a cause right here, definitely you should get an effect also. So if you're getting a breakout towards the higher side, right? If you have a range at these levels, if you get a breakout towards the higher side, then this can be considered as some sort of a accumulation zone, and based on that you can take a trade. Or if market goes below, if market breaks towards the lower side, then this will be just a redistribution zone, and the probability of the monthly's corrective getting extended would be higher, right? Hope you understood that. Now let's analyze it. Now when we talk about Wyckoff schematics, now do you get an idea where we are going? Simple. If you observe carefully, I can clearly see a Wyckoff schematic in this particular concept. Okay. So let me label it for you so that you can understand this in depth. So now if you observe, I have labeled it for you guys. Okay. And if you can observe, why did I label it like this? Well, if you talk about it, market has already created a down move, and here if you observe, if I got a sideways market right here, I could have considered that as an accumulation schematic right here. But market has already created a momentum in terms of it has already given me a semi reversal, and it already started creating an up move, and then later after creating a further higher high and higher low, then it started creating its sideways market right here. If I observe this, this can be considered as a reaccumulation schematic right here. Okay. So let's see forward what happens right here. So in this particular case, now you're having a test below the automatic rally, and then market came inside the levels right now. So in this particular case, this can be considered as your spring, right? Because why does I can consider this a spring? Because market came below the levels and immediately it reacted inside the levels actually. So This is considered to be a spring. Hope you understand that. Okay. Now after a spring, you're having a test right here. Let me label it for you. So as you can see right here, now we have a spring and a test. And in terms of Wyckoff schematics, once you already have a spring, you can take a trade at this particular test and you can have your target at your creek levels, which is the resistance levels at this point. Okay. So what are the confirmation? Now let's talk about choose the type of trade you want to take. If you remember it, in the initial phase, I told you choose the type of trade you want to take. Well, in this particular case, if I'm taking a trade at this point, and this might hit after let's say 1, 2 days, 3 days or 4 days. So that is a short-term trade at the same time. So that can be considered as a swing trading opportunity, right? So if I know that market is going to create a up move, so I can either choose an intraday trading approach within a smaller time frame, or if I want it, I can just directly go to the swing trading opportunity right here. So I am selecting the trade that's in front of me, right? So that is what I told you, that choose the entries based on the market scenarios. Okay, wait for the entries based on the market scenarios and take a trade. And here, if you ask me, this is a really good opportunity right here. We can take a trade at this point. You can keep your targets at this point right here. And in terms of stop loss, you can keep your stop loss below this actually. But in the initial phase, you can keep below the spring. But at the end of the day, you can see right here, market immediately reacted to it. So hence I can keep the stop loss initially at the 50% levels, and then later on, once market starts creating its market structure, we can trail it to the break-even levels. Okay. Perfect. Now, if you observe carefully right here, we had one target hit. Perfect, right? So we had one opportunity. Now, hope you understood how we have taken a trade. Why did we take a trade at this point? Point number one, multiple time frame analysis. From monthly, weekly, daily, everything was on an uptrend. Even in daily, the shorter trend was in downtrend. We already have a reversal sign in daily. Okay, we already have a reversal sequence in daily, and I know the reason why we are getting a reversal from this point is monthly is facing support from the Fibonacci retracement levels. So I know that monthly is an end of a corrective. The probability of monthly creating an impulse is higher, right? So that is the ultimate confirmation right here, right? So based on that, we could have gotten an opportunity, and obviously based on that, I have taken a trade. Now the most important part, you have a reaccumulation schematic right here, and finally you have a breakout towards the higher side. So what does it confirms? This confirms that this is a proper opportunity for us to look for buy trades right here. Okay, so if you talk about, we are actually capturing the monthly's impulse right here, because you know that we have analyzed at the initial base when we draw the Fibonacci levels out there, right? That was the end of a corrective. After an impulse, you should get a corrective. After a corrective, again, you should get an impulse. This is the sequence of the market. So if that was an end of a corrective, in a lower time frame, I got a confirmation that we have a cause that's been built, and obviously effect should be built right here. If there is a cause, definitely effect will be built, right? Simple. Either towards the higher side or lower side, I don't know. But in this particular case, what was the final result? Market break towards the higher side in the form of a reaccumulation zone. So in this case, I would be looking for buy opportunity, right? So in terms of buy opportunity, I would be looking at the positional trade. Why? Because we are in a 1 hour time frame. That is the reason. Now we can wait for the backup to the edge of the creek, right? See, at this point, we have a backup to the edge of the creek. If you observe carefully, we have one level right here. Sorry, I forgot to draw this. Okay, this is your creek levels. Actually, market maximum went above the buying climax to test the levels, and immediately you had a downfall in the form of a signal of weakness, and immediately market came to this levels. If you ask me, I can actually take my trade right here. Okay, and where do I keep my stop loss? Well, if you ask me, I can keep my stop loss below the 50% of this Wyckoff schematics. Okay, and later on I can trail my stop loss to the break evens or any target. Now in terms of target, this is the most important crucial part. Now if you know that this part, okay, this part was the end of the corrective of the monthly time frame. Okay, even if monthly will reverse, let's assume at some point of time monthly could create a up move, right? And maximum it will face its resistance at this point, and based on that it will reverse. Even if it is not able to create a proper impulse, at least it will go up to this point, right? Simple. And if you observe carefully, where do you think market could go at the maximum space? Well, if you zoom in properly, where did you get a semi-reversal part right here? Right? This part, this is where you actually broke the previous higher low and got a confirmed reversal right here, right? So in this particular case, this is where you actually got your sellers dominance entered in the market, right? This is where the sellers dominated. That is the reason you had this momentum. People who understand the liquidity trading, you guys know about this. Okay, so simple, or as you know right here, this is where the momentum has started. So my first target could be up to this point. Even if market has an intention to reverse, then it's absolutely fine. My target could be up to this particular point. Okay, so I'm simply, all I'm gonna do is I'm gonna take a level from this area, okay, and I'm gonna drag my target up to this area. And please understand that I'm showing you an example right here. In the part 3, I'm going to show you some live examples which I've already given to the rogue trading community. Like, I have shown some examples to them. Like, let's say this is what happening in the market, and after 1 month or 2 months, we also had a target hit in that stock. So I'm going to show that in the part 3 actually. Okay, I'm trying to explain you the concept in this video. That's it. Okay, because I already know, that's the reason. So hope you understand it. Okay, now simple, that would be my target. And now if you observe carefully, since market has broken towards the higher side, obviously the probability of market creating a up move is higher, and it has already started creating its up move. Okay, now I'm going to show you one more thing which I observed in this stock, which is one of the most beautiful thing out there. This happens in almost every stock out there. Now if you observe carefully in terms of market structure, let me shift to a little bit of higher time frames and observe carefully right here. Okay, and if you want it, I can switch to a bar chart. Okay, if you observe carefully right here, do you think that this particular area was your horizontal corrective and market started creating its impulse right here? Perfect. This was your impulse, right? Market started creating its impulse. In simple, all I can say is from here you got your impulse, right? This was your impulse. And do you think this is just a corrective? The answer is yes, right? Where is taking its support? Actually, is taking support at the previous creek area of your reaccumulation schematic right here, right? Most importantly, point number 1 to be noted, it is taking its support from the reaccumulation schematic. Let me prove the Fibonacci levels right here. Okay, let me shift to the candlesticks right now for your confirmation. Okay, and let me take a Fibonacci level from the previous higher low to the new higher high, and look at this point exactly at the 61.8 and 50% levels. Now I hope you understand how do we use Fibonacci levels. We are only using it to measure the correctives, guys. Okay, now if we know about it, I'm going to give you the third confirmation right here. If you go to a 1 hour time frame, and if you see, can you see some sort of a schematic right here in the form of an accumulation schematic? The answer is yes. Again, your market is actually, the smart money is again observing from the same price point. They are interested in this point. That is the reason they are creating a sideways market. Now I'm going to take in terms of examples only. Now let's say we are having a sideways momentum right here in terms of they're building a cause right here. After a cause, you should get an effect. If market gets an effect towards the higher side, then this will be considered as an accumulation schematic, because the lower time frame is in a downtrend. After a downtrend, you're getting a sideways market, and then market is creating a higher high momentum, right? Hope you understand this phase of the market, accumulation. Now, if you say that if this is an accumulation zone, you should get a breakout towards the higher side, right? If it is a kind of like a distribution schematic, in terms of distribution, in terms of redistribution schematics, it was already in a downtrend, right? It was already in a downtrend right here. If you are getting a sideways market, if it breaks towards a lower low, it means that this is just a redistribution schematics, right? Let me label this and let me show you what kind of schematic that we have right now. Okay, now. Okay, so if you observe this part of schematics, what kind of schematics do you think this is? I'm going to leave that to you. Okay, what kind of schematic do you think is? Well, if you say this looks like an accumulation schematic, Wyckoff's accumulation schematic, right? We have a selling climax, automatic reaction, then secondary test. Market went up to the previous creek levels. It was not able to go above, but at least it went up to the previous creek zones of the previous reaccumulation zone, right? And then finally you had a spring test below the selling climax, immediate move, a test, and market is creating a up move right now. Perfect. Now if you observe, do you see an opportunity right here? The same opportunity that we had at this point. Exactly. Now if someone would have taken a trade at this point, they could have taken a trade, right? Very simple. And they're going to have a target at this point, and they can keep your stop loss again at the 50% levels. Simple. Okay. So if this is the case, then it's absolutely perfect. Okay. Breakout towards the higher side. Perfect. Now we have a jump across the creek with the increasing volume, most importantly, right? We have a jump across the creek with an increasing volume, and obviously, and based on that, you can add more positions right here. So, well, if you know about it, we have taken a trade at this point. If you know that this is again, you're having a schematic right here and market is creating an up move, one thing, you could have already trailed your stop loss of this trade, right? The second one, you can actually take your trade again, right? You can add more positions if you want it. So this can be included in your, in terms of what you can call it, in terms of trade management, right? How much quantities, how much stop loss you want to add. So I'm adding more positions right here. That's it. Okay, this was just a retracement on a monthly time frame, guys. This momentum, after a higher high momentum, market came down. This is just a retracement on a monthly, weekly and daily time frame. And in a hourly time frame, we had a accumulation schematic again on the same previous creek zone levels. And then based on that, we could have taken a trade, and obviously market, the probability of market creating a momentum is higher, right? Okay, perfect. Now if you observe carefully right here, we also have one more opportunity. I'm going to give you an introduction to it. It's called the angular schematics. Okay, what is angular schematic? Is nothing but when you have an angular corrective, within that corrective you have multiple legs. Actually you have a multiple leg corrective right here, right? So if you have multiple leg corrective, definitely market will respect those levels. Okay, and most importantly, when you draw this parallel channel, the most important part of this parallel channel is the 50% level of that parallel channel. Okay, the more the market reacting to the 50%, the stronger the channel is. And also understand, like if you have a channel where market is reacting to it one by one, like this, I'm going to give you one example of the rogue trading community right now. Okay, so now we are in the Telegram actually. So this is the rogue trading community's members only channel, and I'm going to show you an example right now. Okay, so this is September 27. Okay, and I have shared an image in the rogue trading community's private member channel. If you observe carefully, this is Bank Nifty's 5-minute chart. Okay, so if you observe carefully what's happening right here, even in an angular corrective, we have absorption happening, and we have identified the Wyckoff schematics in an angular corrective right here. Okay, and if you want to know what happened after, so technically market was already in a downtrend. Within this angular corrective, we had different kind of springs right here. So based on that, one could have actually taken a trade on the test part, determine that market could create a up move from this point, and based on the demand and supply divergence, you could have actually identified that, and you could have captured all this momentum. But if you ask me what was the results, well, I'm going to show you that right now. Okay. Okay, well, this is October 3. The same image which I showed you, this was the results actually. Okay, after a spring, market was at this point, and then later on it respected the 50% levels, and then finally it had a breakout. Okay, after a breakout, it retraced, and we got a really good opportunity to the next creek levels actually. So this is how the entire structure works in the market. Okay, so even these are very powerful. If you know that obviously based on this we have a really good opportunity, one could literally take a trade at this point. Okay, you can keep your stop loss below the 50% levels, okay, because these are very powerful. And targets, in terms of targets, I'm just adding more positions right here. If I was a positional trader, I'm just adding more positions right here, and based on that I can take my trades. Okay, so in this particular case, let's see what happens. And obviously you have to choose based on your lifestyle, guys. Okay, this is something that every single trader goes through it. Like they don't have enough time in the markets, and at the same time they choose intraday trading and they trade in mobile. Please don't do it. Okay, trade properly and definitely you're gonna get really good results in the market. Okay, perfect. Now if you observe carefully, we had a target hit at this point, all the 5 trades right here. Okay, from 1 2 3 4 5, all the 5 trades we had a good target hit and we had a really good momentum right here, and this was a complete positional and swing trading approach. But at the same time, please understand, you can use the same concept on a lower time frame for intraday trading also. Well, if you want to have some idea about how you can do this on intraday, well, I've already created a video. It's called VSA trade on Bank Nifty. Okay, I'll leave a link in the description. You can click on it and you can get an idea how I traded that in the live markets in the rogue trading community using multiple time frame analysis concept. Okay, hope you understood this concept in a way. Well, this is the end of part 2. And in the part 3, I'm going to show you some results that are happening on the rogue trading community. In the sense, in August or July, I've given some sort of stocks for an analysis in the form of an educational content. I don't provide any signals and so on. But at the end of the day, that is how I can teach them. Because let's say I'll teach you the concept, but I also have the responsibility to prove that this concept works. Right, so that is what I always do it. So it could be a one-to-one sessions, or it could be a group practical sessions, or sometimes I share charts like this in the rogue trading community all the times. So if this is the case, then most of the times I share charts like this, and what are the results of those analysis, that is something that we're gonna cover in the part 3. Okay, so that's it for this video. See you in part 3.